We're now going to hand over effortlessly to Alex Newman, who will be quizzing me.
We moved from vents to vets now. Mike, I know this is also a market you've covered in recent weeks, but Julian, it was you who looked at the full year results for FTSE 250 constituent CVS this week. The shares were on the floor, I think, at the start of this year, but they're up about 67% in 2025, and they leapt on these numbers. But I would think before we come to the results, I just wanted to first talk about the elephant in the veterinary waiting room, namely the CMA's market investigation into the market. What's the latest there, and how does it affect CVS?
Oh, yeah. Thank you, Alex. Nicely done. The CMA and veterinary market investigation is all about looking at monopolies within the veterinary market. It's been rumbling on now for the best part of a year at least. And the reason why this has become less of an issue is that the interim judgment is due imminently into that investigation. And they'll have a starting report here in October. And the final report with all of the recommended remedies is expected by 22nd of May next year at the latest. That's a statutory date. So the CMA has to meet that deadline. It's actually been putting deadlines back regularly over the last 18 months or so. So that is the final time that they have in order to deliver the judgment. CVS, as we've talked about, our image of vets is probably shaped, at least I guess Michael and me will remember this from our childhood, watching All Creatures Great and Small on TV on a Sunday, where usually a sort of a nice gentleman in tweeds driving a Morris Traveller would go around Yorkshire curing various animals. But veterinaries these days are all about having a branded local firm, but with a back office that is a large corporate consolidated entity. So the reason why the CMA was looking at it is whether there is a natural monopoly with certain veterinary practices in parts of the country. Certainly down here where I live in Devon, there's usually like one vet who covers a couple of hundred square miles. So you don't really have any alternative to go to. So CVS was, prior to the investigation, aggressively acquiring veterinary practices in various areas. And it has now paused that expansion until the result of this inquiry becomes known. But it has to do something in the meantime. So it has been growing abroad as a way of offsetting any risk that it has from having possibly to sell off bits of the business at the behest of the CMA. So that's where we are at the moment with that investigation. So the possibility that regulatory fog is about to lift is what is driving partly the share price rally this year.
Yeah, and so to the results, I mean, they did say they've essentially paused growth in the UK, pending the any remedies they might need to make and the CMS market investigation results. But yeah, I think shares are up to 10% in the 2 and a bit sessions since that announcement. Is that all about the international growth story? Is that what's driving sentiment in the market?
Well, partly, yes. I mean, the thing that people latched onto, the results were largely pre-announced, as they tend to be these days, in a trading update earlier. So there wasn't that much surprise about the overall numbers. But what became obvious was that there was a return to like-for-like growth in the fourth quarter. And that seems to be driven by the acquisitions they made in Australia. And they need that really because management has made this target of, signed up to this target of 4 to 8% revenue, like-for-like revenue growth every year. And the UK market being stagnant means that the only place that they can generate that is obviously in Australia, which is why they're acquiring more and more sites in that country. I mean, Australia, I don't know why that's popular particularly, but I think there are some issues around regulation which are slightly easier down under than they are here. And it's possibly also a less consolidated market than the UK. So they're going to run into fewer monopoly issues than have been apparent here in so far this year with the CMA. So yeah, there's definitely something happening on the operating level, but it's not necessarily happening in the UK. It's definitely focused on their international growth.
They sold their crematoria operations, I think, to help fund some of that expansion last year. I think they said it was a 10 times adjusted EBITDA multiple, which I profess no expertise in in the pet funeral business, obviously, but that seems like a decent valuation. How are they going to get the cash or repeat the trick if they're really hoping to bulk up in Australia? I think a division where they've only got about a tenth of their business currently. How is that going to be funded?
Well, it looks like that will partly be debt, possibly equity in the future, but they're not particularly leveraged at the moment when you look at the balance sheet. So they can leverage that up a bit in order to fund any future expansion, which they did do post period. So they acquired, I think, 2 more sites. One of which is kind of the Marquee Animal Hospital in Sydney, and also it should be cash positive quite quickly. So they ought to be able to fund their Australian expansion from existing cash flow as it builds up, and they add more sites and more practices to the estate down there. And it seems to be a story that people buy. I mean, that on a sort of like-for-like basis, when you compare the two businesses, definitely a more profitable area to be in, and that allows them then to consider the expansion of the balance sheet.
I mean, they've got not really much of a dividend to speak of. Things are still relatively in a holding pattern until the CMA announces, but they do, I suppose, on the plus column, they've got this, gearing coming down, and they've got a growth story, even though it's not a major part of the business. Where does that leave things valuation wise? I appreciate I've stacked up some qualitative and some quantitative metrics there, which are always hard to balance one another against. What's £14 looking like to you, Julian?
Yeah, so it's about 14 times earnings at the moment. It has come off a very big high. I mean, let's not forget that the share price was 3 times more valuable just in the aftermath of the pandemic, when everybody was buying a pet, to offset the loneliness of being in a lockdown. That actually led to a lot of assumptions that the business would grow anyway because everybody had bought more pets. But I don't think what CVS and the wider analyst community misjudged was that people had just held off not going to the vet if the animal was sick. But the main point really about that valuation, I mean, I thought it looked about right for the expansion of the business. It's still dependent very much on the UK, because as we said before, 90% of the business is based in the UK still. And if consumer spending is still stagnant, that affects the operational cash flow, and the CMA judgment will lift uncertainty, but it doesn't lift people's ability to spend more at their vets, and it costs a lot. I mean, I can tell you, from personal experience, having run a farm, that it's very much, hello, £200, where is she? £400. Can I have a bowl of hot water, please? £600. I mean, it's not a cheap exercise.
Yeah. Okay, that sounds like a fair balanced judgment.